Welcome to the brand new Impact Investing Corner, where every month Dukas Copy TV will be speaking to Quadia, a Swiss investment management company dedicated to impact investing. I've got two special guests in the studio today. I have the Managing Director, Guillaume Taylor, and Cheryl Hicks, the Sustainability Investment Partner. Welcome, both of you. Thank you very much for coming in. Now, Guillaume, I'm going to start with you. First of all, I want to talk about social responsible investing, the importance of it, and exactly what it means.
Social responsible investing is a notion that we as investors have to contribute positively to the whole economic value chain. Social responsible investing started many years ago, and the first type of social responsible investing was exclusion. We exclude from our investment portfolio companies and sectors that we feel are harming society, harming the environment. After a while, we realized that simple exclusion wasn't enough. We had to go further. Companies were providing tobacco, alcohol, armament. These are typical companies and sectors that were excluded from responsible portfolios. We're providing services for people who are asking for those services. Us as consumers, we drink alcohol, and so why should we penalize the companies that are providing the services that we're asking for? So we decided to go a little bit further. We looked at best in class, so it's a notion that companies we don't exclude any company or any sector, but we take the best companies in those sectors. Then we started focusing on themes. Themes are really going to make a difference in the world. And this was water, healthy living, and clean technology or renewable energy. These are thematic sectors that more and more investors are focusing on. And then we wanted to go a little bit further and saying, how can we also be partners with these companies that we're investing in? So we started going into shareholder activism. And that's the concept that we are owners of the companies. We influence these companies, and we have a right to vote for these companies. So let's enter into dialogue with them. And in this partnership that we have, we can further the causes that are important and the global stakes that are important in this world.
Now, there's a big debate about the trade-off between social returns and financial performance. Is there really a trade-off?
I don't think so, and I don't think there's any empirical data that can prove this. SR investing, in contrary to impact investing, which we'll discuss later, SR investing is investing in the traditional markets. There's no difference. Aside from the financial analysis that we do on the companies, we add the ESG elements, environment, social, and governance. But we stay in the traditional two-dimensional investment of risk-return. So I don't think there's any element right now that can prove that there's a trade-off between financial performance and social performance. On the contrary, most people who are in SR investing will say that we're adding shareholder value to these companies that have to perform well. Now,
Cheryl, I'm going to speak to you about corporations. How do corporations view sustainable investing? Do they see it as favorable or unfavorable?
Yeah, I mean, I think as Guillaume just mentioned, I think that all companies would like to be in the portfolios of sustainable investors and believe that their company is a socially responsible company and is delivering value to society as well as to shareholders and as well as to the economy. Now, how that's evaluated is very different, of course, by different investors. And companies historically were providing value, as we said, to shareholders through jobs to the economy. And now many companies feel that that this is part of their core business and that there are future business opportunities in addressing global issues. And this is what companies would like to come through.
Now, leading on from what you just said there, Cheryl, in that case, how do investors find a socially responsible investment?
So there are a number of indicators that indicate what a sustainable company should be, and as was mentioned before, these tend to fall into the categories of environment, social, and governance, and perhaps an overall factor of really asking the question, what is the company's value to society? And typically companies now will have defined this in their corporate strategy and will report on it in their annual report. And investors then can look at the corporate profiles and really question companies on their strategic positioning. You know, how are they delivering value to society? What are they delivering, or how are they mitigating environmental damages? How are they thinking about their role in terms of sustainable economic development? Companies should be able to answer these questions, and this is what sustainable investors are looking for.
Impact investing is something we're going to be talking about in a lot of depth over the coming weeks. So perhaps you could explain exactly the difference between socially responsible investing and impact investing.
So to put it, to summarize it briefly, social responsible investing is investing in traditional markets, and we're avoiding to create destruction. Impact investing has gone further in saying, how can we use finance, how can we use investments to create value? The first real theme in impact investing was microfinance. We realized that by providing loans, by providing financial services to people at the base of the pyramid, we could really change their lives, and we could really create value thanks to the one asset that we have, which is money in essence. Microfinance had a fantastic beginning. It did very well, and it really opened our eyes to the notion that we can create value thanks to our investments. So impact investing has gone much further than microfinance, and I would say microfinance is part of the impact investing movement. It was the first one. But we understood that microfinance in itself, financial services in itself, could not by itself eradicate poverty, and by itself could not fix the environmental problems of this world. And so there had to be more. There had to be access to health services, access to education, access to clean energy, and so forth. And so this impact investing movement has taken off to complement what microfinance has done. And it's investing in the economy, investing in the infrastructure, and it's a complement to financial services of microfinance.
Cheryl, Guillaume, thank you very much for coming into the studio.
Thank you.
Thank you.
Now, we'll have more from Quadia on the ins and outs of impact investing over the coming weeks, so plenty to look forward to. Stay tuned to Dukas Copy TV. Goodbye for now.